Another video. Now today we're going to do a weekly market stock breakdown to give you an indication in terms of what you can expect from the markets this week. We are going to look at the Nasdaq, the US30, the SNP500, the German 30 index, as well as Usoil and gold. Now if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you'd like for me to cover in my next video. Now, if you probably wondered exactly what had happened to the markets on Friday, the Nasdaq, as we can see over here, was up 3.3%. The S&P was up 2.47%, and the Dow Jones was up 1.76%. We saw some massive bullish candles coming through from the Nasdaq, as well as the US30 as anticipated. So I did this breakdown on my Instagram, and you can see everything went as anticipated. We had that pullback in the continuation. Also, the SNP500 pulled back from exactly where I said last week as well. Now, if you wondered what moved the prices so aggressively on Friday, because there's always a lot of speculation in the market, and people go, oh, it's because of this, and it's because of that, and it's because of this. The honest truth is the reason why the market had basically cool down a bit is basically the after the Federal Reserve, uh, the Federal Reserve came out and said that they didn't say so, but according to the PCE numbers that we got, so that the inflation came down. So it also so that the data that we got on Friday for the inflation, it shows that the personal consumption expenditure index rose to 6.3% year over year in April, down from 6.6% in March, while the core PCE inflation, which does not account for food and energy, were up 4.9%, in line with the Federal Reserve estimates and down from a previous reading of 5.2% there as well. Now, that was one of the one of the major key reasons why the stock markets were up, because with the continuous progress in inflation, it means that interest rates is less likely to be hiked aggressively, meaning that the stock market will be less likely impacted. The drop in inflation numbers this month effectively moves the Fed put back on the table for now, reducing systematic market risk. And also, the Fed put refers to, for those of you that don't know, it just refers to a point of which the Federal Reserve sees the economy and financial market as weakening so much that it will refrain from tightening the monetary policy so much that markets can fall apart. Now, the slowing inflation is what the market has been hoping for. Now, for those of you that don't know, that has not been on this channel for so long, when inflation goes up, interest rates goes up, the stock market goes down. When this inflation slows down, ultimately the prices of the stock market then ultimately continue higher, because the fear of investing in stocks is the price you pay for higher interest rates, meaning that consumers will be less likely to spend, and that means these companies listed on the stock market is less likely to make money, and as a result of that, you'll see some unemployment come through because companies won't be able to sustain all of that stuff. But the easiest way to understand it is basically how I've been reading it for all this time. And then just to that's basically, if you didn't know, why the stock market moves so aggressively. That's just that the Federal Reserve, they came out on Friday. There's the PCE numbers, and then the good guy came out and he spoke on Friday, and he's was basically said that inflation had slowed down. There we had that guy that came to us. They spoke on Friday. When we had some other stuff, they came through as well. The personal income was down also. But yeah, now if you didn't know, it's basically inflation starting to slow down, and that gave investors hope that the Federal Reserve would not hike interest rates as aggressively as anticipated. But that does not mean that anything can happen. However, investors are now hopeful for next week's data that we expect to come out through as well. Next week, we know it is the NFP that's coming through. So yeah, we're gonna have to wait and see for that as well. I'll just start a poll as we go along. I'll wait for the ADP numbers to come through as well. Look at some other data and then make a decision there as well. So before we jump into the breakdowns, I just wanted to explain to you guys why the Nasdaq were up so aggressively on Friday. So now you know it's not because the market was trading at support for the entire week or the consolidation phase, but that's why the markets are so aggressively on Friday. Now this week we do have a public holiday on Monday for the US, so the markets will be relatively slow on Monday. Some places, some assets will be closed to trade. So there's a public holiday on Monday, and then on Wednesday we got the PMI, we got the job openings, which is normally comes up before the NFP, and then we got the ADP. The ADP is basically just a payroll company that collects information of how many people gets loaded onto the payroll, and they kind of give you an indication of how many new people were added, and that kind of gives an indication of how many new jobs were added. But those numbers doesn't always add up, because sometimes people get added onto the payroll within that given month, and then they lose their jobs, and then by the time the NFP numbers are calculated, the two numbers doesn't sit well, and that's why you'll see the ADP numbers and the NFP numbers doesn't always correlate with one another. We also have the average hourly earnings to see if there's any increase in salaries over there. The NFP is coming out to tell us how many new jobs were added for the previous month into this month. Then the unemployment rate tells us whether the unemployment has gone up or down for the US, and that basically tells us whether or not the unemployment, if the US is doing good in terms of getting new jobs, getting new people on board, because that's the ultimate goal, to bring inflation down to below 2%. Sorry, the unemployment rate down to below 2%, which is what they were shooting in terms of the pre-pandemic levels, if we remember that one there as well. So, and then we got the Treasury currency report as well, which is not that much my concern. Now let's jump straight into the data, my good friends. We're going to start with the famous NASDAQ100. Now if we start on the monthly time frame, what do we have over here? Now also it's very important to keep in mind that we have 2 days before the end of the month, and not just that, Monday is a public holiday, so that doesn't count. And then we obviously have then we've got Tuesday, which is the last day of the month, and that will be the last day for this year as well. Now if you start on the monthly time frame, I guess it's very clear to see here that the Nasdaq had printed a strong resistance. The market then broke above resistance, tested it as support. The market came back to test it as support, and that kind of gave us that indication based off last week's breakdown. I explained all of the reasons why we can expect that pullback, but it will be very interesting to see where the market does close at the end of this month there as well. We get a close above this level or below this, or will we be moving sideways here as well? But we're retail traders, so we look for short-term opportunity in the market. Next up, we do have the weekly time frame. Now here on the weekly time frame, you can see the market printed a massive bullish candle. The market had also printed this structure over here. Now there's obviously room for a further move to the upside. Now we have this massive impulse. The market started that correction, and if you take your Fibonacci from the high to the low, you can see that the market had not pulled back to the 0.382 yet, which is exactly what we expect the market to do going into next week. Sorry about that, guys. And then if you drop down on the daily time frame, what do we see? Now this is kind of the structure that you do want to target in terms of the daily time frame, which is allocated right over here. Now there's two ways that we can approach the situation over here. Now there is a high possibility that the market is going to that level. We could potentially see the market pull back, okay, to go and hit that level before continuing higher as well. Let me just delete this. I've got no reason why this thing is doing that. So we can expect the market to go there, pull back, potentially pull back, and then continue higher. But we know as traders, we have to always be reactive and not predictive, and we have to learn to adapt to always, because the market changes on a daily basis. So there is no question to whether or not we're going there. We are going there. We are going to pull back. The question is, it would be very important to just monitor the price around this area, because we could potentially just dip and continue, or we could just start off from there as well. But that is a move. That's an easy move that you can make use of there as well. Next up, we do have The US30, also known as the Dow Jones, is going to clear the charts over here. Now, the Dow Jones is quite interesting. The market had printed this very strong level of support, broke below that. It's now testing it as resistance. Now, it would be a very wishful thinking if we say that this move to the downside is not going to take place. Now, the market had come to test it as resistance. Now, trust me when I say there is a good possibility for the market to continue lower, but because we had this market printed resistance broken above that, it came to test it as support. Now, I've spoken about this many times, and some people looked at me like I kill baby pandas for a living, which I don't, and that is exactly what the Dow Jones did. Now, the Dow Jones is now set up for a continuation or for a pullback to the or move to the upside, but there is short-term buying opportunities. The long-term opportunity would only be would only be able to make a decision on that as we receive the fundamental data as we move along. Now, the weekly time frame kind of looks the same as the NASDAQ100. We have this massive impulse. We have that correction. We also have the market that broke above this level over here. Now, this level acted as support. Market came back to create an equal low. Market fell to all support, broke below that. That's so the resistance got broken. All of that resistance is once again turn support. Now, there is a high possibility that we could potentially see a 61.8 pullback on the Dow Jones. Now, taking the Fibonacci from the low to the high, and we can see how the 61.8 in this case, we have all of the structure to the left, but we're not going with that. So we're going to take this most recent structure over here. Now, there is a high possibility that we can see the the Dow Jones go and hit that level over there. Now, we would potentially like to see the Dow Jones go and hit that level over there. Also, if you drop down on the daily time frame, this is exactly what I'm speaking about. Now, the market has the potential of printing this W formation. Now, after a W formation, you expect to pull back to the neckline before the continuation as well, because the W formation is considered a bullish pattern from a technical perspective. But as traders, we have to be reactive. Now, if you do want to make sure that you're on the right side of the market, basically what you want to do is you have this massive impulse and you always expect to pull back to the 0.382. Now, if you take your Fibonacci from the low to the high of this impulse, you expect the market to not pull back, but to continue this rally to the upside. Now, the Dow Jones could potentially continue this bullish momentum without pulling back at all, and then start the pullback, and then give us that continuation to the upside. Now, if you are not a scalp trader, but if you do trade on the daily, like on lower time frames, and for the students that's in the mentorship, applying the day trading concept that we do trade, this would be a good opportunity for you to get in there and then take profit there, then look for sales again, applying the same rules, and then look for that buying opportunities to the upside there as well. Alternatively, we could potentially see just a little, like a small correction and then that continuation. However, I kind of just see the market continue higher, and that is my own opinion. Next up, we do have the SNP500, also quite aggressive, same kind of price action over here. And if you go on the monthly time frame, what do we see now? From a monthly perspective, we I don't have to go through this whole thing because it's the same as the Dow Jones, so I'm not going to waste you guys' time. So we also have the same price action over here that we have on the Dow Jones. The market had printed this level of support got broken. We never came back to test it. If we do that, because that's a price that the market had visited before, market came back to test it as a resistance, broke above that. All of that resistance is now turned support. In order to measure this massive impulse, we need to take our Fibonacci from the low and make sure the 0.382 lines up with the neckline of the W formation, and that is exactly once again where we can expect the market to continue higher and then pull back and then potentially continue this move to the upside here as well. Now, it's very important that you don't just buy the market, because you'd not be buying at a good price. You can't just buy the market in the middle. What I suggest you do is you apply the rules of whatever strategy it is for you to get in there, looking for some potential buying opportunities there as well. Next up, we have got this index, and I made this breakdown on this index as well. I'm not going to do it again. If you had watched my video for last week, you should have made enough money for you to quit your job today, because the market was there. I explained all of the reasons why we can expect that move to the downside. The market had now finally broke above that level, and now you can basically look for Yeah, so you can definitely expect this market to pull back from exactly where it is there. Sorry. So I'm just trying to not spend too much time on stuff that I already spoke about. So you can expect this market to pull back from exactly where it is now. This to complete this overextended W formation, which is considered a bullish pattern from a technical perspective. Next up, we've got US oil. Same thing happened here. Again, I was just right on this as well. Now on this market, we can expect the same thing to happen. Now on the daily time frame, the market had just completed this W formation to the previous leg. Also, is trading at a strong level of resistance. There no pullback expected before that continuation to the upside. Now the take profit level, I would suggest I'll probably go for that. Now, the way we're going to approach the situation is quite simple. Just wait for the pullback to the neckline of the W formation and then start looking for buying opportunities also. And if you want a further reference to this analysis, you can go check out the video that I did last week Sunday. Alternatively, I will leave a link in the. I'll get a pop up to come up here somewhere. I don't know how this fancy this YouTube stuff work, guys. I just create videos. That's all. Any case, next up we do have our good friend gold over here. Now, if you start here on the monthly time frame, now I've spoken about gold here as well. Gold printed this strong level of resistance, broke above that, came to test it as support, the massive impulse correction, and we expect that continuation to the upside. If you drop down on the weekly time frame, what do we see now? From a weekly perspective, the market had printed this overextended information. After an overextended information, you expect a pullback to the left leg before that continuation to the downside. The market had also broken above this very important structure there that acted as resistance, broke above that, and it's testing it as support once again there as well. If you drop down on the daily time frame, what do we see now? From a daily perspective, the price action is quite interesting. The market had printed that important structure there. It looks like the market is stuck within a consolidation phase. Now we could potentially see this consolidation phase continue until we get those NFP, or until we get that dollar index news on Wednesday, and then gold could potentially slip and then continue lower. There's high expectation for the NFP numbers to be good, but can't be good because there were not enough jobs created. Now there's just two ways to approach this. I'm not gonna say it's gonna go this way. I can't say that, guys. So this is how I'm gonna look at it. I'll probably do another update once I have the fundamental data, but from a technical perspective, that's basically where this market's sitting. It's not moving anyway. It's basically just the start of a liquidity, so we are gonna start this range as we are now. And then when we get the fundamental data, we're going to see that, or we're going to see that there as well. Now, that is it for me. Not from me, but from me, guys. I'll say thank you so much for the support that that my loyal viewers has given me. I really appreciate it, guys. Thank you for your time, and as always, cheers for yes.